There's a bit of a pause, I would say. Across the wider UK market, prices pretty much flat. We're seeing a little bit of an increase in activity, but the higher mortgage rates are holding the market back. In prime central London, which historically is less debt reliant, we maybe would have expected a bit more activity, but I think we're seeing sort of discretionary purchases, which make up a high proportion of the market, holding back to see what happens with the election, which means that whilst there's quite a lot of properties on the market, there's quite a lot of people looking. We're not necessarily seeing that translate into sort of offers and activity. Certainly not right now.
The wider UK picture is certainly one of more stock that's come through, but buyers are hesitating. It seems every bit of economic news seems to push the first rate cut since March 2020 further and further into the distance. Mortgage rates aren't doing very much, and the fate of the property market is quite closely tied, I would say, to mortgage rates. It's more about affordability, I suppose, across mainstream markets, but if you're looking at prime markets across London, it's more about the sentiment, and I think the fact that at the moment the first rate cut is moving further and further away, and we have an election, and given where mortgage rates are, if you need to move, you are sort of planning to do so, but if you don't, you're holding back. We've been saying that prime central London prices are overdue a period of price inflation for a long time now, but it hasn't seemed to materialise for various reasons. And I think at the moment, the chief reason is the sort of uncertainty politically. The biggest risk at the moment probably facing the market is what's not in the Labour manifesto. What is in the manifesto looks relatively benign. But once we get that first budget towards the end of the year, I think we'll have a much better indication of where the new government, as is likely to be, where they're going to go in terms of the taxes they're going to raise. They've ruled out a wealth tax, but that doesn't mean they're not going to be taxing wealth. And so I think once we have more clarity from the new government, we'll have a much better idea. But broadly speaking, at the moment, we're down 1% this year, given the uncertainty, and pretty flat over the following year.
We're expecting that prices will be pretty much flat over the course of 2024. So we've got a 0% forecast, which is effectively a price fall if we factor in inflation. But we then expect prices to start to increase through 2025 as those lower rates start to feed into the market. A bit more certainty comes through, hopefully post-election, on what the new government potentially will do and what the implications of that will be. And then we're expecting that prime central London outperforms in the latter part of our 5-year forecast period. Prices haven't really moved that much, certainly in the last 10 years or so across prime central London. So we think whilst there's a bit more certainty, we'll see those buyers come back, and that will lead to an increase in prices.
There's not an exodus of wealth, but people are looking at their options, and some are leaving. Places like Italy, which has a more favourable regime. The Labour manifesto came out last week, and it wasn't entirely clear what they would do. There's wiggle room there, which could mean that there is a more generous regime than Jeremy Hunt was proposing. Some people who are perhaps on the fence, perhaps don't have kids in school here, are looking around at their options, and some are leaving.
We haven't necessarily seen sort of a mass exodus. There are some people leaving. There are some landlords exiting the market. There are some people reconsidering their options because of uncertainty over sort of rules over how wealth will be taxed and tracked in the future. For the mainstream market, there's not as much of an impact around an election. You can pore over the data, but actually there's nothing that really ties that sort of election run up to a real drop off in activity or prices. But for prime central London, it's slightly different, particularly if you look at the sort of 2019 election when there were concerns over wealth tax, which meant that the market was pretty slow, probably in the 6 to 9 months in the run up.